ThePrint Off The Cuff, presented by IIFL Wealth and Asset Management, powered by Raheja Corp, corporate partner AU Small Finance Bank, associate partner TDI Infratech, in alliance with Jindal Steel and Power, airline partner SpiceJet.
When you have Gita Gopinath visiting Delhi, you don't waste time with introductions and you don't use any long preambles and things. You just let her talk. So Gita, explain the state of the global economy to dummies. I am one of those.
First, Shekhar, thanks for inviting me on this show. The state of the global economy. So I would describe it in the following way, which is the global economy continues to recover. So if you look at our growth projections, it's positive, which means we have recovery continuing. But the momentum definitely slowed. So relative to the first half of this year, the second half of this year was a weaker momentum in growth. The reasons for that was, of course, you had the Delta waves in different parts of the world, but also the supply disruptions that we have seen. So those have weighed on the recovery. And of course, uncertainty has shot up in the past few weeks with the Omicron variant, with inflation coming in very strong in many of the major advanced economies of the world. So I think we're entering again another very turbulent phase, unfortunately.
So, I mean, the reason I'm even more confused than usual is that you have all this uncertainty coming in. You have now almost quarterly ups and downs in the economy. Inflation going up, stock markets are booming. In the middle of all this comes this new player, crypto, which obviously I don't understand. And most people who are investing in it don't understand it either. So is this some kind of a perfect storm building up?
I don't know if this is any more of a perfect storm than it was in 2020 or that it was in the beginning of this year. But what is certainly true is, unlike March 2020, when governments had healthier balance sheets, they had much more fiscal space, and central banks could cut interest rates very aggressively because inflation was low in many parts of the world. That's not the case now. So if we again have a big hit, another big, a much more prolonged health crisis, countries are going to have to deal with it in a situation where the debt levels are much higher than they were in 2020. They have much less space to spend on all the kinds of policies that they did in the previous round. And central banks have to now recognize that inflation can become entrenched and they might have to move more quickly on raising interest rates.
And health personnel still haven't recovered from the exhaustion of the last wave.
Absolutely. I mean, that has been tragic. The fact that continues to be the case, that we've seen wave after wave and large amounts of demands on the health system around the world. I think one of the lessons, of course, to be learned is that countries will need to build up much more health care capacity for the medium to long term in general. I mean, we could see the stresses on the systems in different parts of the world.
Have you done any modeling, or do you rely on any modeling, trust any modeling done anywhere else on what might happen now with Omicron?
We do have our own in-house models too. Of course, we have, we're building these off what the epidemiologists use, but we're also adding in what happens when you have mobility restrictions, when you have behavioral changes in interacting with others and so on. The details matter a hell of a lot. What do you assume for the replication rate? It makes a big difference if you assume it's 4 or if you assume it's 5. So these tiny changes, the predictions can be very sensitive to what you feed in, which is why you've had predictions that said, well, you're going to have a very large number of cases, and that never happened. We've had situations like that. So we do have our own in-house models. I think it's still early for us to tell what exactly Omicron is going to imply for the global economy, which is what we care about more, that we can speak to, as opposed to on the health front. But we've seen lockdowns return, travel restrictions return, and though I think everybody still hopes that it's not going to be going back to what happened in 2020 in terms of severity of restrictions, but these are very uncertain times.
Yeah. So how do I explain to an ordinary reader or viewer of the print, who's not really a reader of pink papers or business channels, although I'm not sure they know very much, uh, that how come we had 1 year of bad economies globally across the board. In India, particularly, we had a decline, a sizable, unprecedented decline, as your country report also noted. On top of that, we suddenly have this inflation, and we have this global commodity prices boom. Uh, doesn't it sound irrational?
So if you look at the global recovery as a whole, the global economy has rebounded strongly. Now, we say that there's been a dangerous divergence because we've seen advanced economies rebound very strongly, while many emerging and developing economies are still nowhere close to pre-pandemic, where they would have been in the absence of the pandemic. For instance, our current projections are the advanced economy group by next year will be back to where they would have been in the absence of the pandemic, which is a very healthy, strong recovery. So there's no doubt that demand globally has come back very strongly. So there's been pressure on the system as a whole. But the second thing that's happened is that the consumption people now spend on has shifted from services to goods. You're much less likely to travel, you're much less likely to go to big stadiums, you're much less likely to engage in theaters and so on. But you substitute that by ordering a lot of things online and having goods delivered to you. So we've seen this big increase in goods demand. So even if there was no pandemic, if for some reason everybody woke up and started demanding a whole lot more of goods, we would have seen supply chain disruptions. And so what's coming from high levels of demand, we're seeing supply chain disruptions that are there. But then there's also been the pandemic-related problems in terms of, certain manufacturing units having to be shut down because people falling sick and contact tracing prevents them from coming to work. So this particular crisis has been one where there has been a hit to supply. It has an negative effect on supply. And at the same time, globally, demand has come back quite strongly because, about $17 trillion in fiscal support was provided around the world. So we've seen demand come back strong. So that is generating, and that's been prolonged. I think the expectation was that by the second half of this year, demand would rotate back away from goods to services, that we would not have these pandemic-related disruptions, and then we would not see these pressures on inflation. But that has lasted much longer than expected. Then on the energy price front, there's been multiple factors. Again, it depends, if you're talking about oil or natural gas, but there's also been weather-related effects on prices of
Coal, India and China, coal is a big player.
Yes, and coal is a player. Of course, countries were trying to phase out the dependence on coal. So shale gas was one of those oil supplies that kept oil prices contained. So the expectation was that if ever oil prices went above $60 a barrel, American shale would come into the market strongly enough that prices could not go up much further. But that's not happened. And part of the reason for that is, the expectation that we're moving in the long term away from fossil fuels, and investments have gone down in these sectors. And so we're not really seeing that kind of supply response in these areas.
So at which point do you think governments will start to get exhausted? Because for them to deal with a third wave, which category of governments do you see as the most vulnerable? Nothing will happen to the Chinese, we know, because they just shut everything down and somehow manage it. But the rest of the world, would you put the world in compartments, categories?
I think everybody would be in a very difficult spot if that happens. The countries that have managed to get to high levels of vaccination rates, they could still see cases going up, but maybe they would have less stress on their hospitals. Yeah. And so I think they would be in a somewhat better place, which is why it's just absolutely essential that vaccinations continue on a war footing. I mean, what we see is that whenever case numbers come down in a country, then people, forget about
Calm
it,
down,
and then
yes.
then they delay getting vaccinated and so on. I think that is a big mistake. I think it's very important to just push through vaccinations and get as much as you can done, because at least it protects you from severe disease, even if it doesn't protect you.
Yeah, in fact, we just saw a survey the other day, I don't know how accurate it is, that said that nearly 70 million people in India, adults, are vaccine hesitant. And 70 million in such a big population is no big deal. But then you realize that that's the population of France. So you have to get these into a lot more arms. Now, Gita, I'll also take some questions from our subscribers and guests. Normally, we would have had an audience, we would have had guests, and we would have fed them some wine and something to eat, but we can't do any of that, but at least we can take some questions from them. So there is Yogesh Chiplonkar, who's Senior Vice President at Global Insurance Brokers Private Limited. He says, is inequality of incomes now a forgotten concept at a microeconomic level? Does the fact that pandemic saw strong players become even stronger across industries not bother governments and economists?
Oh no, I think it remains an important concern. We have been talking about the K-shaped recovery in countries, which is those people who were in occupations where you could work remotely, they managed better than people who need to be in contact intensive activities. Now, again, depending upon the country, they've been able to address the problem by giving cash transfers to people who were being very deeply affected by it. So in fact, in many countries of the world, if you look at household savings rates, then they've actually gone up. And it's not the case that household balance sheets are in bad shape, especially in a lot of the advanced economies. But on the other hand, in other countries where you could not do those kinds of income transfers, you didn't have the full social safety net. This has been very, very costly for poor households, for low-skilled households. And similarly, if you look at corporations, or you look at firms, the large firms have been doing well, but a lot of medium and small enterprises are struggling. And so you could end up in a world where you have much more concentration among the large firms. These were trends that, at least in terms of concentration, that preceded the pandemic. And this, I think, is absolutely an important issue even now.
So you've obviously seen this inequality report that came out from Piketty and the team. Looks like we can now presume that the pandemic actually increased that inequality. I know what the IMF usually would think, but what's your view on their solutions?
I have not seen the most recent report that you're referring to, but in terms of inequality, of course, there are very many measures. There is income inequality, which is earned income inequality. If you lose your job, then you've lost your income. Now, some of that, like I said, was made up by very large amounts of transfers that the government provided. So, in fact, there are countries where if you look at post-tax income distributions, they've not gotten that much worse. Similarly, on the other hand, if you look at wealth inequality, then you certainly do see a growth in that, a greater divergence, because if you've invested in the stock market, and the stock market has been booming these past 2 years, that there's been a lot more wealth creation at the top. So again, the question is in terms of solutions, what we tend to focus on is solutions to reduce poverty, which is a big issue, reduce income inequality in terms of making sure people earned incomes are growing over time. With wealth inequality, of course, there are multiple other issues, including low interest rates and so on. So that gets much more trickier. But again, even at the IMF, discussions in inequality was not typical a decade ago, but it is very much an issue that we dig into now.
Because inequality now also brings about political pressures, particularly in democracies. So politicians then have to respond to this in their own ways. Have you looked at the state of the world in terms of how different democracies have responded to these pressures?
So, are you talking specifically in the period of COVID, in the pandemic? So, in the pandemic, again, if you look at the G7 countries, for instance, right? You could the US, the UK, Canada, and so on. What they've basically done is provide a lot of income support very quickly and to, in some cases in a pretty untargeted manner, but they've given a lot of income support to households. So one of the reasons that global demand has held up quite well once you started reopening and so on is because of these large amounts of fiscal support that has been provided. So that's one. And frankly speaking, that's been the main way to address inequality concerns. Obviously the challenges that are coming up now are the differential access, for instance, to schooling among high-income households versus low-income households. So again, there are countries that have made it an absolute priority, like the UK, for instance, said that if we reopen, the first things we reopen are the schools and make sure that they stay open. And that was one way to make sure that you don't get this prolonged divergence in incomes that can come because very differential access to education. So that's another one. The third, of course, is on the health front, is to make sure the vaccines are available freely, that hospital access is available for free. So I actually think countries around the world, with few exceptions, have actually tried to have been very cognizant about the differential impact of COVID on different households. Countries have just chosen to do it in different ways and to different extents. But people, they have paid attention to it.
Yeah, but countries are also running out of war chests now. Can even America now make one more round of payouts, print more money? If God forbid the third wave also becomes big?
In the case of the US, it remains the case that the US government can borrow at 1.5% interest rate at a 10-year horizon, right? So incredibly cheap levels of borrowing. So despite the fact that inflation has gone up, I think the expectation is that inflation will come down over time, and US debt is still very attractive, the dollar is still very attractive, the dollar is strengthening. So, from that perspective, the US government has the power to do more. But that said, compared to the previous rounds of packages that they had, I think this time around they would be more targeted in providing these kinds of support measures than they were in the previous rounds.
So there is Mayank Tondak who says central banks, connected with what we're talking about, central banks world over are following easy money policy after COVID. Are we converging towards some asset price bubbles?
That's always a concern, and we've been flagging it actually. So in our global financial stability report that we put out twice a year, we have mentioned about overvalued assets, asset valuations, and frothiness in markets. So that's certainly been there. One of the issues we were worried about at the beginning, which seems to be less of a worry now, was that we thought that when, in these exceptional times, there were moratoria that were put on loan payments, there were all these exceptional measures that were put in place. And then the sense was when these measures are taken off, that we might see a big increase in bankruptcies and so on. We haven't seen that. So that is partly a reflection of the fact that demand came back very quickly once you started reopening economies. And so, a lot of firms in many of these countries have fairly healthy balance sheets, and we haven't seen a big increase in bankruptcies. But yes, I think the stock markets, there's always a question of their valuation, and there's frothiness. If you look at the crypto asset markets, if you see the valuations over there, I'm sure there's some values to the underlying technology, but then there's also frothiness associated with it. So yes.
I was going to come to that, but in a couple of minutes. In your country report, you said that India is one of the fastest growing economies in the world, but India's growth was moderating even before the pandemic. Now I understand IMF using diplomatic language or a euphemism, I would call it decline. India's economic growth was in a decline almost 3 years before the pandemic. What caused that moderation or moderating impact? Let me use your word.
Indeed, just before the pandemic,
because the momentum was broken.
It was coming down, and you could see that in consumption growth and in investment growth. There was, while it was still positive, the overall numbers were coming down. And you see that in credit growth in India, and that remains the case, which is the weakness in credit growth in India, which is usually tied to, how strong consumption comes back and investment comes back. So, the hangover from the financial sector, the non-performing loans, the NBFC crisis that happened, and so on, all of those weighed on spending. And if you look at capacity utilization rates, for instance, even now they're low. So the question is, where would the incentives to invest may be limited. And that remains. So I guess where India is right now is that consumption again has recovered, investment has recovered, but to pre-pandemic levels. The question is, where will the additional growth come from? Because over 2 years, effectively, it's been zero growth cumulatively, because you had a big recession in 2020 and a bounce back in 2021. But usually India's economy is growing at, say, up around 6% or so on an annual basis. So there is still this big difference between where India would have been in the absence of the pandemic and now. And where would growth come from? How will we, there is policies will be needed to get consumption growth revival, investment growth revival. Public infrastructure spending has been strong, and that's been a source of strength, and also in exports. That has also been a strength in recent times, but that more has to happen.
So you're talking about the symptoms in terms of what led to that stalling of economic growth. But what were the actions or policies that might have led to the stalling of economic growth? Because India had not seen this kind of a stalling for many years now, not after 91.
No, so what I pointed out in terms of the financial institutions and the non-performing loans on their balance sheets, that weighed on credit creation in the economy. Then you had the NBFCs that were came in as a substitute, but then they got into trouble too. So the reform of the financial sector, the financial institutions, the insolvency and the bankruptcy code, which was set up to help deal with these NPLs, those are all ways of fixing.
So how well has India done in reforming the financial sector?
It was doing well in terms of reducing the amount of non-performing loans before the pandemic struck. But then, with the pandemic, those have gone up. So I know the numbers from earlier this year. I don't know the most recent numbers, but NPLs had gone up to 9.5%. So, that it needs to be taken care of. But they have to continue to, make sure that these insolvency and bankruptcy mechanisms work. There's a push now to privatize some of the banks. I know there's a bill in Parliament that they're going to be discussing. A long-standing issue has been governance of public sector banks. And that is also another area that needs addressing. So I think some progress has been made. The pandemic doesn't help because it complicates the adjustment. But you have to keep pushing on these different pieces.
So there's a hard question for you from one of our guests, virtual guests, Pankaj Jain, who says your paper on impact of demonetization estimated the loss to economic growth to be limited to about 2 quarters. That is much smaller than COVID closure. Do you still hold that demonetization had a relatively small harmful effect on the economic growth? Because I am connecting this with the 3-year stall in economic growth before the pandemic.
So based on the evidence that we studied, I would not say that the effect was small. I would say that I think I remember it was around 2% of GDP was the effect on the economy. But the evidence that we looked at didn't suggest that there were quantitatively meaningful long-term effects, like that multiple years. So the effects, once cash started coming back into the system, those effects got unwound. So that's based on the data that we looked at, that's where, and I haven't done any further research on it, so that's where I stand.
Because, economists don't all agree on everything, but generally everybody agrees that demonetization was a hiccup in India's growth. But you think that did not cause any long-term distrust of the system, unpredictability? God knows what can happen tomorrow.
From my perspective, the question is, what did that distrust do in terms of anything I can measure economically? And at least when I wrote the paper, which was 2 years ago at that time, what we had seen was there was a strong effect for a short period of time, but there wasn't something that looked like a permanent effect. That doesn't mean that there were not firms that were permanently affected. It just could be that in terms of their impact on the Indian economy, it's small. So it quantitatively doesn't show up as a meaningful impact.
So do you still see India maintaining its 9.5 to 10% growth this year?
Yeah, based on our numbers and the data we've seen so far, we do think that.
Because when we had our last conversation, I think it was in the first wave of the pandemic, the projections you had did not quite come out right? Because you were still expecting a tiny growth of 1.5% or something.
This was in 2020.
2020, and then it became a big mega disaster. Could India have done something differently so as to avoid that 7.5% decline?
Countries, it's been tough on countries everywhere, and all countries have had some very hard hits. Doing a lot more on the vaccination front
Sorry to interrupt you. The second wave has come in this financial year, not in the last financial year. Yeah, go ahead.
Yeah. No, I think there is, when you are in a situation, what happened was the pandemic hit the world stage. There was limited information on exactly what kind of damage it would cause to people's health. And countries went into lockdowns. And when you put a country in lockdown, then by construction, you're going to be affecting its economic activity. And we saw that in different parts of the world. Now, there was a debate on whether lockdowns work and maybe we should just allow for transmission and people getting infected. Every country tried different things. I have to say that after studying the last 2 years, I think one thing what is true is that I don't think any single country can claim that they got it right all the time.
Right.
It's remarkable.
Right.
There are countries in particular months you say, they look brilliant, and then maybe 6 months later,
maybe the Chinese can say that, but they are the only ones making that assessment themselves.
It's hard to point to a country that has consistently gotten it right all the time. So this has been difficult. Our view has been at that time was that more could be done in terms of direct spending measures in India. So firstly to recognize that a lot of policy action was taken both in terms of on the financial side, in terms of help with loans and credit and all of that. But we were of the view that some more could have been done in terms of direct spending measures, somewhat in terms of more direct income support measures. And I think now, if you include what's there in the supplemental budgets, we are India's at the right level in terms of the kind of fiscal support it's providing. But initially, there was very much a focus on more on the supply side measures in terms of.
But India was very cautious when it came to distributing help to people, direct transfers to people, barring the really poor, which you take note of in your report also. You think India was prudent, or you think India was too cautious? Because there are economists who will be in an argument with you on this, I suspect, who've been demanding much bigger transfers to the poor in India, poor and the middle classes.
One can debate the magnitudes that were needed. We were very clear, I think, in every report that we put out, that we said that more needed to be done in terms of direct income support measures, also in-kind support, not just for, there's the Rural Employment Guarantee Scheme, which is there for the rural workers, but there's nothing for the urban workers. And so we were of the view that more needed to be done in terms of direct spending measures, and I think we were quite clear about that.
So you're talking to Government of India now. What are the issues that you discuss? Tell me all the secrets.
No, I don't do that, and we're in touch with the Government of India all the time. Our basic messages. We put out our India Article 4, as you.
Yes,
that's a bit of inside baseball, but you know what that means.
Yeah, that Article 4. In fact, I tried to Google Article 4. This sounds like some UN Security Council.
Yes, it probably goes back. Yes, so it's one of those reports that we put out, and the advice is that fiscal policy should remain accommodative in the near term. And we also, for instance, for this fiscal year, revenues have gone up in a strong way, but there is still the spending that needs to be done. So we need to make sure that the fiscal deficit is not under implemented. So because otherwise there's not going to be enough support for the economy. So those are some of the messages we provide.
So our viewers and readers, just for clarity, we will share a link of this Article 4 country report with you in the description to this video. Please do check it out, because there is a lot of wisdom and a lot of data there, very important. Although most of us journalists don't like to be confused with data or facts, but these are very useful facts. So do check those out. Gita, one issue that keeps rising up, and you mentioned it, and I think that's the time I found that your grin was the widest. So why the grin, and what do you make of this crypto issue? Because, I can't understand, from where does value come, from where does value go? What is being traded? Who's losing, who's winning? Because in a casino, at least there is one principle: the house always wins. In this case, what's the house?
This is, yes, so there is a whole, the technology that's underlying it, which has promise. I'm not best placed to explain what that promise is. Sometimes I've described the crypto assets as, so it's valued now at 2.5 trillion. So I sometimes say we have a $2.5 trillion solution for a problem that we haven't still identified. So there's large amount
whose
of
money
value.
is it? Where is it going? For money to grow, the money must make more money.
Oh well, money can make more money in a bubble for some time, and also in the crypto space, there are many different kinds of crypto assets, right? I mean, so there's the Bitcoins, which I think of as purely speculative investment that you want to invest in. It's highly risky, but you may get a payoff from investing in that. But then there are stable coins which have much more stability in their value. People want to use it for payment systems and so on. I think the bottom line is we are of the view that this needs to be regulated without a doubt. You need to be very clear about the fact that if you're a financial institutions and you have exposure to any of these crypto assets, that you make sure that you have your capital buffers, just as you would if you were exposing yourself to very risky asset classes. We are opposed to cryptocurrencies being used as legal tender. I think that would be that.
Why do you say so?
Because it's, first of all, these cryptocurrencies don't serve the purpose of money, which is to have stability in value. They are also a big risk to the monetary system of the country if it's going to displace the actual kind of legal tender of the country. So we just don't see the need for that at all. And that's not something that we think is important.
So do you see crypto as a problem or an opportunity for global economy?
I think it's both. I think there is always the promise of a technology that we just don't know, that in a decentralized fashion, people might discover many different ways of using it. Distributed ledger technology is already being used in other kinds of service provision, so there's value to it. But we do worry that there are some serious risks associated with it. And the truth is that it's not anything a single country can deal with, because if individual countries regulating heavily or banning, which we do think that regulation is important, but at the same time, most of these crypto exchanges can be done offshore, and so they're not subject to the jurisdiction of a particular country. So it's hard to really regulate this.
But money still has to be transferred. For person A in India to buy a crypto, say in jurisdiction B, wherever, some money has to be transferred from this jurisdiction to another one, or the money has to be transferred back for you to.
Yes, but this is, as I understand it, there are many ways of doing this on the dark net, which evade the kind of typical regulatory systems that can.
And you'd worry about that.
And we worry about that, absolutely. And particularly it's worrisome. In fact, we're seeing this phenomenon becoming a bigger problem in emerging and developing economies as compared to advanced economies. Because in advanced economies, again, the attractiveness of crypto assets and cryptocurrencies is less so than in many emerging and developing economies.
Why do you say so? I'm just taking an extra minute because I'm very curious about this. Why is it so? Why is it seen as a more reliable option in emerging or poorer economies?
Where in countries where you have a much more population which has banking accounts, there's very high levels of financial inclusion, these kinds of assets are not necessarily particularly attractive because you already are in the financial system. But if you're in a country where you don't have access to banks and to loans and you're financially not included, then these kinds of technologies can start looking attractive.
So how are these different, say, from chit funds and Ponzi schemes, which basically target the poor and the lower middle classes, while the better off people have access to banks and more conventional?
No, this is absolutely one of the reasons why there needs to be regulation, because you are exposing gullible people to some very, it sounds like some magic money that you can get.
Exactly.
And, while again, if you look at the numbers, I wouldn't say that we have a problem right now in terms of global financial stability or anything like that. But the rate at which these assets have grown is quite troubling, and this can grow very, very quickly.
Do you see governments, sovereigns beginning to ban it now?
Well, China, of course, banned the Bitcoin. There are some countries, I'm not going to be able to remember them, but they banned parts of it, which is that you cannot use it for certain kinds of payments and so on. But I would say the overwhelming approach is more on the regulatory front.
And so what will be your advice to India? Because we are still debating a bill.
Right. I mean, again, just in terms of the practicality of what one can accomplish, we think regulation is the way to go. Again, like you said, there is a potential underlying technology that is actually beneficial and can be beneficial in countries where there is low levels of financial inclusion. So there is that prospect. But the risks are high, and especially, again, in emerging and developing economies, there are capital controls. There are much more restrictions on what you can do.
Exactly.
So having these new kinds of assets, just introduces new ways of evading these kinds of controls. So we do think that regulation is very important.
And finally, my last question. Sitting at IMF, looking at global economies, do you sometimes worry about the fact that politicians now, including in democracies, and Turkey is a very good example, politicians think that they can run monetary policy, they can run the economy, that principles of economics are also sort of subservient to political commands?
We are out there constantly giving the message that, for instance, if I can be very specific on central banks, the central bank independence is very important. That, when you have what's so-called fiscal dominance, which is, the government budgets determining what central banks should do, that is very problematic. And, this is not fiction. I mean, we know from numerous episodes in the past that when you follow these kinds of unsound economic policies because of some populist goals, then the economy just tanks completely.
And would I be right to say that among the democracies today, Turkey is the biggest concern in terms of this particular phenomenon?
I wouldn't, speak along those lines. I think there are, countries around the world that are facing a situation where Turkey is an example of a country where inflation is extremely high, and at the time
interest rates keep falling,
and where they've been cutting interest rates. So obviously that has the analysis that we looked at. So for instance, one of the things we did was look at inflation expectations across different countries in the world, and in the case of Turkey, you can see the de-anchoring of inflation expectations, which is very concerning because that has effects. That it's much harder to rein that in once you have inflation expectations.
It's a difficult thing to do these days because right now we have this the pattern of strongman leadership around the world. But would you counsel these strongman leaders, most of them are men, strongman leaders, to be a bit more humble when it comes to principles of economics? That principles of economics do not tolerate arrogance or do not make space for arrogance.
I mean, it is our job at the IMF to constantly remind countries about, that there are some economic principles that hold well, not all, but hold well in the world, and thinking that you can defy it and preaching something ultra orthodox may not be beneficial to your country and to its people.
Well, I hope these leaders listen because I find that there's a certain wariness with economists and specialists by and large. What do these guys know? We have to go and get the votes.
Oh, I think there's wariness with economists for forever, right? It's always been the case. But I think it's foolhardy to ignore, sound economic policy making, and there's a lot of experience from it, and a lot of cross-country evidence on what to do and what not to do, and it's important to use it.
That's why Gita keep coming back to India and keep speaking, keep making sense.
Okay.
From Washington, and many congratulations for all the great things that are happening to you. We are so proud of you.
No, thank you, Shekhar. Thank you.
Thank you, Gita.